So you guys are like the Vaster's like the fixer in this scenario, like the SEAL Team 6 that's coming to bail you out.
Absolutely, right at the closing table. No, if you get to the closing table, you're not with Vaster, you're probably waiting too long.
Hi, and welcome back to the Miami Real Estate Podcast. I'm your host, Omar De Windt, Communications Executive at Surveyor Real Estate. Today, we're talking about wealth-changing zip codes, and a meaningful share of it is landing in South Florida. From Citadel's headquarters to Google and Meta execs, and now Palantir, the who's who is coming to Miami. The question is Miami simply benefiting from housing demand or becoming a receiver market for displaced wealth? Helping us answer this question is Zack Simkins, Managing Director of Vaster, a Miami-based private lender focusing on high-value residential assets. And Zack has a front row seat to where capital is actually landing in this market right now. So Zack, thanks for being here.
Absolutely. Thank you, Omar, for having me. Very excited to have this conversation.
I'm excited as well. We were just talking off mic, just about the nuances of what you do, which is not something most realtors think about. And I think our audience is going to benefit a lot from your insight. So let's start with Vaster. For our listeners, a lot of whom are brokers who work with buyers and developers, walk us through what you guys do and what kind of borrower is coming to Vaster versus walking into a traditional bank.
Absolutely. So Vaster is a private lender. We specialize in high-end real estate loans for short-term or duration. So what that means is that our average term of our loan is anywhere between 1 to 2 years. No pun intended, is a bridge loan. It's meant to kind of help the realtor or help the investor or help the borrower facilitate a transaction, importantly. So if your buyer or your borrower is looking to close quickly or has a cash need, then the private lender helps facilitate that transaction in a smooth manner and allows those transactions to occur. Additionally, we do a lot of refinancing where borrowers or investors have a lot of untapped appreciated equity in either their condos, single family homes, commercial land, residential land, townhomes, co-ops, anything on the residential scope or in real estate space. We help facilitate those transactions and refinance those loans and cash out those appreciated equity to allow other purchases or other investments within, the real estate scope. So we've been in business since 2017. We've launched our first fund in 2019. We just launched our third fund all across the same premise, 2 years ago. So we're looking to expand and build our portfolio, not only across South Florida, but also in New York.
I love that. And so you're financing deals in Indian Creek, Surfside, Coral Gables, waterfront spec construction we talked about, and condo bridges. From a lender's vantage point, what does the pipeline actually look like right now? And because there's a narrative out there that the frenzy is over, but the money is still clearly moving.
Absolutely. So the pipeline is heavy right now on the ultra high end trophy real estate assets. So what is that? And when I was growing up in Miami, you would think the $20 million sale was something of significance. That's the one that broke the news, and that's the one that everyone was talking about. Now, a $20 million sale even happens on non-waterfront properties pretty routinely. So when that occurs, now you have a race to the top. So now it's the 30, 40, $50 million plus trophy properties in the premier locations across South Florida that's getting the most highest demand, and that's getting fueled from a lot of not necessarily foreign investment, but foreign to Miami investment. Individuals from California, individuals from New York looking to relocate and recapitalize in South Florida. And then you also have that shift. It's people that are already here looking then to expand and take advantage of this new wave of high demand. So in that sphere, when you get to that price point, there's a lot of banks' willingness to lend, they start to pull back. And as a result, a private lender such as Vaster is able to help facilitate those transactions at very, not necessarily high LTVs, so like anywhere between like 50 to 60% of the value. So if you're buying something for 30 million, that's anywhere between like 15 to like $20 million loan. But it's the price point of those loans that kind of pulls back a lot of traditional financing options and then allows the private lenders to facilitate. In addition to that, on the other side of it, you may have a lot of properties sitting on the market now and a little bit longer, or it may take longer time to sell because you might have the other side of the coin where investors or buyers might want to be more patient, might want to foresee some of these market turmoils, calm down before they make that decision to transact. As a result, we're able to offer those refinance options to properties that are sitting on the market that are willing to sell, where a typical bank or traditional lender may not be as acceptable of keeping a short-term loan on their balance sheet. So we're able to help refinance those loans, help the sellers bridge that point of time until they're ready to sell their property and take advantage of a more mature market and be able to participate in that space.
You touched on the type of buyers you're seeing, so I want to get into that more because I know our audience hears a lot about the migration story, right? So the Citadels, tech executives, we talked about Palantir moving in at the top. Does that show up in your loan applications? Are these heavy hitters coming to you for a loan, or are they paying cash?
Most of those individuals probably pay cash, but a lot of times I see is that when they start investing in Miami or showing interest in Miami, it's not just their transaction that hits the news, it's the ripple effects that start to feel the environment. And what happens, it's essentially like a tide where it lifts and it rises all boats. So now all of a sudden their neighbors' properties are become more valuable. Now there's a new interest, new demand in certain submarkets because they start to see a shift. They start to see that transition. So we see a lot of the surrounding neighborhoods be affected in a positive manner that helps lead to more loan applications, as well as some of our existing borrowers now come back to us looking for either increased loan amounts or renegotiated terms because they feel now their properties have increased in value, and rightfully so, because now there's a new level of demand. You have a new wave of buyers that's helping to elevate their assets and the assets in those neighborhoods. So it's definitely a very big positive in Miami. It's helping, create a lot of positive animation, and it's creating a good positive momentum as well. In addition to that, you also got to look at the commercial side of things. Well, these individuals are not only relocating themselves personally, but they're also bringing their businesses. And that's what's doing is that's helping increasing maybe the employment stability, helping keep strong qualified applicants within our region, bring in new high earning individuals to help facilitate not only residential transactions if they want to buy condos, single family homes, but maybe purchasing power as well,
Right.
spending money in the retail centers, spending money in the shopping centers, the grocery stores, gas stations, whatever you call it. That's helping keep Miami active and not just become a tourist city anymore, but becoming an economic hub for these corporate institutions that's elevating commercial, residential, and all across the real estate spectrum.
Absolutely. And one of the big commercial relocations I think that's made big headlines was Wells Fargo relocating their corporate headquarters to West Palm Beach. So, along with the Citadels and whatnot here in Miami. But interesting, going back to residential. So, we've been watching this too, but I think there's a real divergence, right, in the markets, if you will, because you talked about ultra prime, right? Let's say Ken Griffin buys a $60 million in Coconut Grove. But what's happening in sort of the middle market, which it's funny to say middle market when you're still talking like 5, 10, 10
Right.
million.
Yeah.
But we're in Miami. What's happening there? Because I think that sort of softened a little bit. Is that what you're seeing as well?
Absolutely. So it's definitely like demand is not as elevated as there is in that ultra trophy, real estate spectrum. So if you're talking 20 million plus, there's a big demand for that market, but there's also become that big demand becomes a lot of needs and they become more buyer specific. So they lead those transactions in the trophy assets that are built more custom as opposed to spec, those transact and they sell relatively quickly. But if you start to move into that middle market, sub 15 million in that 5 to $15 million range, as you mentioned, now those assets become difficult to transact. And what happens is that those sellers expect they're going to get a premium on their properties. So they might be looking for a certain price point that's unrealistic. And if they don't manage their costs, specifically like in spec home development appropriately, then they're going to get stuck. They're going to start seeing the effects of, okay, higher, cost of living, higher property taxes, higher insurance costs, higher construction costs. So then they are forced to then price their properties into that upper echelon tier of where the ultra, buyers are maybe shifting toward. But if they didn't build to suit accordingly, then they're going to get stuck. And then you start feeling the pressures of your lending partners. And that's going to put some negative pressure onto the pricing. And then you'll start to see some like price saturation and price depreciation, which is healthy for the market. And that's what that market really needs because there are certain neighborhoods that have an oversupply of that 5 to $15 million home that's just sitting idle. That's just not transacting. You start to seeing that on condos as well. Any condo that's in that 5 to $15 million range, if it's an upper or lower penthouse and it's not a new project coming online, it's sitting idle for a long time. So I get a lot of phone calls from owners, investors in that asset classes that needs a short-term loan to satisfy a loan requirement from their previous lender as they hit maturity or they need help with their payments or anything of that nature. And so as lenders see that, you got to be very fruitful of it and be conservative in your underwriting and start to factor that in as far as looking at the demand cycle and seeing where we are in that wave, and then understanding of how you could price your loan accordingly. So that way you're not putting too much negative pressure on your borrowers.
Interesting. So you mentioned the structure of how buyers are approaching deals. Are you seeing high net worth buyers like the ones coming from New York, California, internationally? Are they financing differently in this phase, or is there more leverage, less leverage, different product types?
So I think everyone, whenever I start having those conversations with those buyers, I always like to ask them, like, what type of loan do you need? I want them to tell me I need X% or X number of dollars. I want this rate, this many points, whatever factors are. And then I try to build a loan product suitable for it. So that way we could transact and I could help facilitate it. So I could truly become a debt partner as opposed to a debt lender. And those individuals, specifically from California and New York, they're looking for private lenders. They understand this business. They like convenience and simplicity. So they're not necessarily worried about the higher rate as long as you could execute effectively. And you start to see that advantages when you're in that ultra high net worth region of, a loan amount to 20 million plus or 10 to 15 million, meaning property values are 25 to 30 million, because those individuals aren't susceptible or aren't as sensitive to the pricing component of these loans because they're more concerned with the ability to transact quickly, effectively, and conveniently. Now, on the other side, that middle tier that we were mentioning, those buyers are sensitive. So then you have to be creative in how you price and structure those debt. But that's mainly targeted toward that foreign investor. So that foreign investor is the one who's buying that condo, in that $1 million to $3 million range, who's using it as a second home or short-term rental investment that wants to capitalize on all the positive animations happening around Miami. So there you kind of have to, and those individuals typically want max leverage because they're looking to just get money out of their home countries, park it in here in, Miami real estate, and then take advantage of the appreciation, over time. So in those components, it's very important to understand their story, understand why they need our financing, what challenges were they having maybe with a traditional lender or another cash event, but also across the same thesis for the foreigner, it's convenience, it's the relationship. And if you're able to build that and create that sense of trust,
Hmm.
then their willingness to transact with you is increased, and then you create that positive dynamic. So across all those three spectrums, the New Yorkers, the Californians, the foreigner, they all follow the same thesis of how can we position ourselves to create a positive experience and a trustworthy environment so that they can feel that they're getting their best deal, and then we're able to help them in their process.
So sticking with foreign buyers, have you seen an uptick or maybe anything differently in terms of the markets where the foreign buyers are coming from lately?
Yes. So we're seeing a lot of buyers right now coming back from Argentina. That was interesting. Some Venezuelan buyers have resurfaced as well, which I think is a good sign. When we first launched Vaster, we were 70% foreigners, 30% domestic. Then through the course of COVID, that shifted. You went from 70% domestic to 30% foreigners because we had that influx of American capital coming into Miami. Foreign investment pulled out, and you had, little bit of uncertainty from that foreign point of view. Now that uncertainty, I think, is clearing up. You're starting to see that capital get pushed back into the market. You have a lot of new condo projects coming online that was probably purchased 50% foreigners, 50% domestic, or roughly around those ratios. So as those projects close, foreign capital is now, re-registered back into the city. And so then they need more debt and they need more financing options to facilitate those sales. Our thesis is that our portfolio will now get back to that closer to that 60-40 or 50-50 range between foreign and domestic. And that's what we've seen so far this year.
And as far as, going back to New York then and California, so there was a lot made of the elections in New York at the end of last year and how that would possibly impact migration into South Florida. Did that come to fruition in terms of what you're seeing, or was it more of just kind of like talk, or what's the reality there?
I think in the beginning, there was momentum there. Like we had a few transactions with New Yorkers, or we had some individuals looking calling us for loans from properties in New York, trying to cash out money there, thinking their values are higher today than they might be tomorrow. But, it didn't really carry a lot of weight forward. So it
Sure.
was short lived. The movement, the big draw of what the influx of people coming here and really caused like a market shift and market excitement was from California. Starting from the individuals on the top and then trickling it down to, people that are affiliated with them in some manner, still trying to get exposure to Miami.
Sure. So let's talk about can't talk about leverage without risk, right?
Sure.
So let's talk about the risk for a second because you're the one underwriting all this. So
Mhm.
when you're looking at a high value waterfront asset in South Florida today, what's the variable that gives you the most pause? Is that insurance costs, appraisal gaps, rate environment, something else?
Yeah, no, I'm a big believer of, you know, for any real estate transaction, as long as you buy in the best properties, buy in the best locations, or buy with the best, pricing, you should be okay. But with waterfront properties, you got to be a little more strategic because the easy pieces is it's waterfront. What could happen, right? But there's a lot of stuff that could happen. So you need to understand what your pricing is at the point of acquisition, and then what's your strategy. Are you intending to build on this waterfront asset? Are you planning to fix it up? Are you planning to just have it as a second, third home, live in it, whatever it might be? So you need to explain your story. You need to have your strategy behind it. And if that strategy makes sense, then everything else could start falling into place. First step is understanding your acquisition price or your current cost basis. If that's an inappropriate level and you're buying within the market standards, then we tailor our loan accordingly. You're able to then take leverage upon that price point. And not all the time max leverage is good. Our cost of debt is higher than a traditional lender. So you're going to have a negative effect if this is like an investment for you because the carrying costs will be too high. Your insurance costs are going to be high now on waterfront properties. Your taxes will get reassessed as soon as you close. So you're going to have a higher carry and then couple that with a high debt payment. And if you don't have the balance sheet or the credit worthiness to service it, you could get put into a precarious position. So I tell my borrowers all the time that you really got to understand the risks component, not only my risk for lending you money on the property, but also your risk in borrowing money from me, because not all leverage is created equal. But know that, here at Vaster, we're more of a debt partner as a debt lender. And so we do that thorough underwriting. So that way, if we give you a term sheet, if we're closing at the closing table, we're in it with you until the very end based on that strategy that you positioned. So we're seeing, that on a lot of the acquisition front. We do a lot of construction financing on that single family spec home on waterfront properties. And that's usually the thesis that we operate under. We need to understand your current cost basis. And if it's at a manageable level, then we're able to finance your construction and take you to completion. And now we're both in it together. And that's usually the best relationship because then we're able to hopefully, facilitate it and take it through to the end.
And you mentioned the call that excites you is the one's like, hey, Zach, I'm closing in 2 weeks. So
Absolutely. Yeah. If you call me and you're closing in 30 days, I say, call me 2 weeks from now. That's too long. There needs to be a sense of urgency, I think, in any transaction for a private lender such as Vaster to really start engaging and getting excited with because our solution shouldn't be your first call. You need to exhaust other options that are probably more cost effective toward your business strategy. In the event that you're not able to materialize it, then you could then shift toward that private market, the private lender, to continue to execute that plan. So usually that's with timing. And that 2 to 3 week turnaround is very convenient when there's a sense of urgency and there's a need. And as long as there's a need, we see that, we understand it, and then we're able to price and execute.
So you guys are like the Vaster's like the fixer in this scenario, like the SEAL Team 6 that's coming to bail you out of the closing
Yeah,
table.
absolutely. Right at the closing table. No, if you get to the closing table, you're not with Vaster, you're probably waiting too long. But if you call me 2 days before, and then and you have a sophisticated background, you have some market presence, you're getting referred to us through the right channels, then we're able to step in, really trust the process that's already been embedded, and able to execute in a very timely manner. So we help a lot of condo developers in their projects that are looking to close out their buildings. That might be some buyers might be a little stuck because they've already got their first, second notice. So then we come in, we help facilitate those transactions, and we provide them a short-term loan, and then they're able to then sell their properties after closing or refinance with something more long-term down the road.
Sure. I love that. So big picture question for you, Zach. I'm going to ask you to put all your cards on the table here. So based on what you're seeing in terms of real deal flow and real loan demand, is what is happening in South Florida, in your opinion, a durable shift in where wealth is being permanently parked, or is there a rotation element to this that could moderate?
So that's a great question. I've thought about that a little bit recently. And, I always like to tailor what's happening within Miami real estate to like personal experiences because like I'm a big believer of you got to invest in what you know, like if you're doing your own portfolio management. But in real estate too, you also have to understand the market shifts and market demand based on your own personal experiences. So for me, I have 3 kids. We live down in Pinecrest, and I see the demand in private schools already elevated. Like my 3 kids are in the private school just because my wife is the most type A individual you know. So she was on our wait list 2 years before they were even ready to enroll. And now you can't get into that school. There's like the wait list is out the door. And that's not just from people, living in our neighborhood. That's other people in our neighborhood wanting to have that desire. So when you have new money coming into the city that already has an expectation of a certain lifestyle, of a certain, housing requirement, of a certain neighborhood, well, that demand is now set in stone. When you're starting to see, a high demand in private education, that means people are looking for places for their kids to go to school and they're not looking to kind of shift that or uproot them again. So now you know that money's parked. When you're starting to see these major corporations not only shift their own personal assets, but also their back offices, the headquarters, the staff, building new office space, building new hotel project, condo project, whatever it might be, embedded into Miami, well, now you know that's here to stay. So definitely to answer your question, I think that wealth, that demand, it's here to stay. It is a great sign from Miami because now it shows that not only in the past, it was always like people in Miami believe in Miami, but does everyone else believe in Miami? That was always the question. Like, I don't think I understand it yet. I don't think I don't get it. Like, is it just a foreign hub or is it a domestic hub too? Well, now it's both. Now you have the foreign investor still active in Miami. You have the domestic investor now active in Miami. And that's what's going to create Miami as a true mecca for real estate in the near future.
Absolutely. Someone sitting in Manhattan or Bel Air right now, Zach. So they own a significant asset. They're watching what's happening here and they're thinking about repositioning capital into South Florida real estate. What is the conversation that you want to have with them before they make that move?
I think, first I would invite them to the city, stay at a hotel on the beach, enjoy the fruits of your labor and take what Miami typically would think has to offer, but then get away from the tourist areas, start to get exposure to the different neighborhoods. And you start to see, well, Miami has developed into a true metropolis where there are individual neighborhoods now that offer their own sense of community, that have their own niches, that creates a sense of, resemblance
Sure.
to maybe your other neighborhood in LA or your other neighborhood in New York. So you start to see some significance there. And now you start to meet people that have shared similar experiences, but those people aren't in California. They're not in New York. They're in Miami. They're in Florida. They're in Palm Beach. They're in Fort Lauderdale, wherever it might be. So then you start to create a community of your own. I would first say visit Miami, experience it for what it has to offer, and then start to get exposure to specific neighborhoods so you could start to feel that, wow, this isn't just a place I could visit for a few days. It's a place that I could call home.
I love that. So before I let you go, I have to ask, what's the biggest ticket deal that you guys have done?
So last month we just closed a Star Island loan for 35 million.
Okay.
We did we've done loans in Indian Creek for north of 30 million. So that's typically like the upper tier of loan sizing that we do. We've done deals, last month we did another deal in Orlando for commercial multifamily land. That was 15 million. Right now we're closing on a few properties in Una for a couple million. So we do a wide range of the spectrum. But I'll be honest, Omar, I get excited for a $200,000 deal the same way someone calls me for a $30 million loan. It's the same rush. I
Right.
think, I'm in this business, Vassar's in this business is to do deals. So at the end of the day, yes, the higher the loan amount might get the storyline or might get the post, but the complexity behind it is just the same as like the complexity for a $200,000, $500,000 deal. But I'm really big on how can Vaster facilitate that? How can we add value? And if I could add value into all ranges of that spectrum, then Vaster's in a good position to withstand all different types of market shifts. Because we may not have $30 million loans, every month,
Sure.
but you're always going to have transactions in Miami real estate. And so if Vaster is able to participate in that spectrum, then we're positioned in a good spot to hopefully have for a foreseeable future of positive fortune.
So the passion is there. What's the deal that excites you the most? I know you love all the ranges, but like,
Sure.
what's the scenario where I call you and you're like, oh man, this is a good one.
If the my favorite scenario, that's a great question. My favorite scenario is if you're under contract and you have a deposit and someone else was unable to execute and now you need like a lifeline, I love that call because there I know one, there's a deal to be had. So I'm able to really leverage a lot of our relationships and execute. But I'm able to, investor specifically has a biggest value added in that transaction because then you're able to kind of come in, execute, and then at the closing, if you do as planned, you're viewed as like the hero and you get that reward. And now that borrower is viewing you as a true debt partner because their previous experiences were soured. They did not come through, but you were able to kind of execute and provide that need. So those are usually the calls that I really enjoy. And then I always like to get the payoff call too. I like to see the loans pay off because then I know that, okay, the plan worked.
Great.
Vaster provided our level of service. You followed through on what your intention was with your exit strategy. Because remember, these are short term. So we've kind of seen it full cycle. And then there's always down the road where that individual or that parties in that relationship now saw Vaster's expertise, saw Vaster's professionalism, saw Vaster's ability to execute. Now they refer new business to us. And that grows the opportunities. And that's what I love to see. I want to see every opportunity so that way we could then choose which transactions we pursue. And the ones that we pursue, those parties know that we could deliver.
I like it. I love it. It's the SEAL Team 6 of private lending.
That's right. That's to be our new tagline.
There you go, Zach. Final thoughts for our audience before I let you go?
I guess my final thought would be, to all the listeners out there, if, you're unfamiliar with the lending space or the financing component in transactions, definitely my recommendation is just get familiar with it. A lot of the time the realtors don't know about Vaster or they don't know about private lenders or lending in general. And that's okay. And that's how it should be because you should be focused on the sale, focus on your own client. But it's always important to kind of have that understanding of like, what happens if things get stuck, if things don't go to plan? How can I then add additional value in that transaction? Well, now, hopefully Vaster could get put in line, but not just Vaster, but just the lending space in general. Seeing how lenders help facilitate and keep things moving forward, I think creates a lot of health into the market. And that's really what all of us really want. And ultimately too, just continuing to invest and explore Miami. I think everyone needs to be a proponent for their city, a proponent for what they do. And the more people you tell, the more knowledge that you share, now you're starting to see that influx of people, that influx of excitement, that influx of companies coming in here. I think we're in a really exciting time, but keep that in mind that, things are cyclical and there's waves. So just kind of, take those ebbs and flows for what they are, but enjoy the ride and always take that risk.
100%. So Zach, thank you for being here. That's been a great insights for our audience. I know I certainly learned a lot. We'll have to keep watching the market and have you back on in the future. So thanks for being here.
Absolutely. Thank you for having me.
Ladies and gentlemen, this was Zack Simkins, Managing Director of Vaster. Give him a call, and if you need an extract, if you will.
That's right. SEAL Team 6.
SEAL 6, baby. So I'm Omar De Windt with Surveyor Real Estate here, the Miami Real Estate Podcast, your home for expert insight on all things Miami real estate. Make sure to like, subscribe on Apple, Spotify, wherever you listen. And we'll be back soon. But until then, remember that here in Miami, the future is always bright. Take care, folks.